Is Applied Materials a buy at these levels? On today's episode, I want to break down the following points. First, I want to take a closer look at market overview. Second, growth opportunities. We do have some cool AI stuff here. Third, we're going to take a closer look at the dependency of revenue from China. Fourth, recent updates from the overall company. And five, my overall thoughts on valuation and would I buy. So let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so let's begin with the overall market overview. So most of the information that I'm going to take a closer look at today comes from the Morgan Stanley Technology Media and Telecommunication Conference that happened on March 4th of 2024. This is the most recent data that we have for Applied Materials, especially with the overall market growth and market overview. So I do have a lot of great information here, and let's start off with point number one. So point number one, we're going to take a closer look at just the market overview and where is Applied Materials seeing growth, where they're seeing a bit of a slowdown, and what do they see happening in the upcoming years. So right now they mentioned that ICAPS is one of their biggest markets right now and has been able to outweigh a lot of the weakness they're seeing in certain spaces. So for those that are not familiar with ICAPS, ICAPS is an acronym that they use for mature technologies, IoT, communication, auto, power, sensors, and those types of devices. So here you kind of have more the mature nodes. Right now, that market is very, very strong for Applied Material, so strong that over the past year, it has outweighed the weakness they saw in the NAND market and the weakness they saw in leading edge market, etc. So ICAPS has been an area where the company started the group that focused 5 years ago on developing new products for that market, and that's going very, very well for them. So in the past few quarters, due to kind of over inventory corrections, we have seen kind of that slowdown on leading edge, but Applied Materials is saying that that's okay because we're still seeing kind of that strongness in some of the mature nodes and some of their ICAP solutions in general. So now that we understand a little bit of their overview market, I want to talk about their growth opportunity. And one of those biggest growth opportunities is HBM. And for those that are not familiar, HBM is high bandwidth memory. And high bandwidth memory is the memory solutions that you see in pretty much all form of AI chips, being the MI300, being the H200, the H100, the Blackwell 200, and the list goes on and on. And the market is growing. So Applied Materials says that the company has greater than 50% share in HBM and in DRAM in general. So right now, this allows them to grow and continue to grow in the AI market. And if we're just in early innings of the AI stage, then obviously this bodes well for Applied Materials in the future. Before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. So why is there growth here in the HBM market, Jose? Isn't this just another process here in the DRAM space? For the HBM market, it's form of an advanced packaging solution to some extent that goes into the DRAM process. The typical DRAM process is roughly 700 steps. But when you add HBM, you're adding an additional 15 to 20 steps. And Applied Materials believes that right now they provide more than 50% of the equipment for those additional steps. So that's why the main reason that they're seeing that overall growth in HBM right now. And we can see advanced packaging in general is also a big portion of Applied Materials growth potential. They mentioned in 2023, it was roughly $1.1 billion in revenue, and it should grow to approximately $1.5 billion in 2024. And that overall is going to continue to grow as we continue to see more forms of advanced packaging solution entering the AI chip market. Another growth opportunity is the Sculpta tool. So the Sculpta tool is expected to be a 200 million tool sale for them this year, and I'll talk a little bit about the Sculpta tool later on. But they believe last year when they launched it, they mentioned that it would be a $1 billion tool for them on the roadmap. And they believe that that's actually very conservative. They're seeing a lot of experimentation on that equipment going forward and even with customers today. So the Scopa tool can be another huge growth driver for the overall company. Now, something else that can drive growth is just future innovation in semiconductor manufacturing, right? With semiconductor manufacturing, we're going things to like gate all around, we're going to CFE technology, we're going to backside power delivery, and all this needs new form of equipment and new forms of solutions. So this creates kind of a nice flywheel for the research and development market, and obviously bodes well for applied materials, which is developing new solutions. The final growth opportunity that I have here before we take a closer look at the next point of the Chinese market is the overall service business and the service revenue. And for those that are not familiar, service revenue, Applied Materials has tons of equipment, so they need to kind of either support, create maintenance, replacement parts for those equipment pieces. And they mentioned that they like this business very much because financially is super strong. It tends to have high margins, it tends to be reoccurring, and as their equipment business grows, their service revenue grows because more equipment's out there means more servicing, more parts, and just more offers that they're able to provide to their customers. And they mentioned those are long-term contracts that they average over 2 years, and there's usually a high renewal rate for this because who else is better equipped to service applied material equipment than applied material itself. So these are all kind of the growth opportunities that applied material believes they have in the upcoming years. One of the points I wanted to talk about was the Chinese market and their dependency on the Chinese space. So applied materials mentions that they benefit from being allowed to ship some technologies to China that they weren't allowed to ship last year, and that's why they're seeing a nice growth in the Chinese market right now. The other thing that they're seeing is that ICAP strength that I mentioned previously is also seen in China. So the strength that they're seeing all around is helping kind of offset a lot of the weakness that they were seeing in things like leading edge. Now, some people might be wondering, hey, Jose, is this China market sustainable? And the company mentions that yes, they kind of have internal informations, they have perspective of all their customers, what factories, capacities do they have in place today, what are their plans in the next 4 years, and then they also kind of give their own perspective in a logical sense and determine, hey, look, this is a market that we can continue to grow. Now, what is the worry about future export restrictions? Because this hurt applied materials. And the company mentions that most of the business that goes on in China for their business is actually mature logic. So this is technology that usually doesn't see much future restrictions. So they're not speculating on new rules, but they do believe that right now the business has already adjusted to those rules in place. And like they mentioned, most of the revenue in China is coming from mature technologies, which shouldn't really be kind of impacted by future export restrictions. Now, the final question here for the Chinese market I have is future revenue from China. So for applied materials in this quarter, their most recent quarter, 45% of revenue came from China, and that is a lot. But they do believe that they're going to return to a more normal level, which is about 30% as the year progresses. So again, we're seeing that the CFO does understand that right now it seems like there's a lot of pressure in the Chinese market, but it's pretty much saying that, hey, look, it's nothing that we are personally too worried about right now. So we talked about the market overview, we talked about growth opportunities, we talked about dependency from China. The next two things I want to take a closer look at are recent updates from the company and my overall thoughts on valuations and would I buy. So there's only two main updates that I have here for Applied Materials. On March 11th of 2024, they did increase their dividend by about 25% from 32 cents to 40 cents per share for this quarter. And right now, if we take a closer look at dividend yield for Applied Materials, is roughly 0.78%, so not even a full percentage point. Now, the company on February 26th did announce new tool solutions that are going to meant for the angstrom era of chip making, and that's going to be like below that 2 nanometer chip technology. And they pretty much talk about, for example, that Sculpta tool, which is meant to help reduce EUV double patterning steps. They also talked about new etch technology like the Sim3Y Magnum. They also talked about chemical vapor deposition tools and other types of introductions like metrology tools for their overall market, thanks to an acquisition they recently made. So Applied Materials Materials is constantly focusing on providing new solutions, and this is why we see an overall growth in the company's revenue and kind of a nice confidence in the future market. Now, the final question I have is, would I buy at these levels? And now if we take a closer look at PE ratio, currently is sitting at 24. Forward PE ratio is not expected to move much because it's expected to be kind of a stable market. But forward 1 year is expected to drop down below 21. I don't think the stock is crazy expensive, but I'm not necessarily buying. And there's one reason I'm not buying. If we take a closer look, my investment style is more looking if a company is going to outperform the overall semiconductor market. And we can see historically, year to date, Applied Materials has kind of matched more the SMH, which is a semiconductor ETF. In the past year, it's pretty much the same thing. Applied Materials is a little bit underperforming the SMH. In the past 3 years, the same thing. So actually, Applied Materials is really underperforming the semiconductor market. So based on this data, I would say that I personally would invest in SMH instead of Applied Materials. I'm not saying Applied Materials is a bad investment, but if I would just kind of want to get more semiconductor market results, I'd rather just invest in the ETF. The only thing that Applied Material, in my opinion, has going for it right now that can really make it more of a market beater is that overall HBM market, that advanced packaging market, and that AI market. So there's definitely the growth opportunity for this to outperform the semiconductor space. But I personally believe if it does, it's not going to be by too much. It's not going to be a complete outperformer. So for that, I'll rather reduce my risk and kind of just focus on SMH instead. Let me know, what are your thoughts? Would you buy Applied Materials or would you rather focus on a semiconductor ETF? I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.